What's up, everybody? We got a YouTube video today. I did post a short about the YouTube video, so you guys, if you want, go check that out. But this is the trade we took today. We took one trade this morning, basically right at market open, just a little bit after. We took this long in here up to this 4-hour gap, as I'll show you guys in a little bit. We entered after the 30-second inversion, and then you guys will see what these things are there later. But just looking on the daily, we had no clear bias on the daily. The only thing I had marked out, noticed, was firstly we swept these sell side liquidity, so these lows in here, previous day low, as well as this external low in here. And then we also had this volume imbalance in here on the daily time frame as well. Zoom in a little bit more so you guys can see that. So there's that volume imbalance. And my trading view is a little bit behind. Just because I don't have the subscription to TradingView. So if you guys are worried about the difference, that's why. But here on the 4-hour, as you guys can see in here, this is that 4-hour unmitigated gap that we had before we had entered the trade. Now we obviously taken it, but there's that 4-hour gap in there. That was our drawn liquidity for today. And then we also had these highs up here, but these are the external highs, so we're not so worried about those. Then we go on the hourly time frame. This is kind of where it gets a little better. Let's zoom in a little bit here. So first thing we noted was we had this change in state of delivery on the hourly, or order block, whatever you guys want to call it. It's these 3 down move on the candles. This was the order block. Let me edit this just a little bit. So there's that order block. It was these 3 candles. This is the beginning. And then I just graded out the order block. And when I grade it out, I do the bodies. I don't do the wicks. And then we also had this hourly gap in here. Let me zoom in a little more so you guys can see this hourly gap. So we did have this tap in the hourly gap, and you guys will see it on the lower time frame a little more clearer there. Let's edit this just a little bit. There we go. Going down to the 15-minute. Not so much on the 15-minute here. I mean, just these highs up in here, but that's the same as the 4-hour gap. And then besides that, there was really nothing on the 15-minute. We did have this 15-minute gap in here, but I was more aiming for the hourly fair value gap in the order block as well. And then we go down to the 1-minute, not the 30-second. I don't have the subscription. We go down to the 1-minute. So this is kind of what it looked like in the morning. I don't have market replay again because I don't have the TradingView subscription. But this is kind of what it looked like right this here. But this is the trade I took this morning. So as you guys can see in here, firstly we'll note these 2 lows here, these equal lows. So we had this one here at price around 681, and then we had this one here at 674. That was also within this 1-minute fair value gap. And then again, these orange lines are the hourly order block, and then this purple box is the fair value gap in the hourly time frame. So as you guys can see, we came down, tapped that hourly gap, and then let's note this again. This in here was, what was the low of this candle? Let's just say 675. Just to round it up, the low here was 671. So as you guys can see, we swept this low, tap on this 1-minute gap. We swept this low is here as well, tapping the order block, the hourly gap, and then we had a little displacement leg up. And then you might be wondering what these red lines are here. So I just put the Fibonacci tool on here to grade out this discount wick. Just discount wick is basically, the bottom of the wick of the candle. And why did I grade out this one specifically and not this one or this one? That was just because we tapped the, an important level. So that can be a fair value gap, order block, breaker block, whatever you guys want to call it, right? So I graded out this one, and as you guys can see, let me move this over a little bit. This candle actually did end up respecting the 50% level, so that is what we look for. So on the discount wick for the move up, we wanted to respect the 50% level, so that basically means we don't want this body closing below this, obviously the 50% or the halfway point of the discount wick, right? If we had closed below the discount wick, then the counter would have been noting that we're going to continue lower, and then we could have targeted, right, this low, the entire order block fell, this low in here, right? But since we had that respect, we couldn't even reach the 25% level. That was my first kind of, not confluence you'd call it, but kind of like thing making me confident on why we're going to go up. And then this is also the octant. So we have the octant is basically between the 25% level and the 0, or the 75 and the 1, right? So as you guys can see here, we did end up tapping a halfway point, so that octant there. And then this orange box here, I would show you guys, but I don't have the subscription. But this was a 30-second inversion. If you guys go on your chart there, you'll see it. This candle inversed that fair value gap in the 30-second time frame. After we had that inversion, I just had entered market, and then stop loss was below the low of this candle. And you guys asked why this candle and not this one here. It was because this one had respected that discount wick there, so I had put it just below there. And then TP, or take profit, was at that 4-hour gap, the start of it. So that was my draw on liquidity, like I noted on the short that I posted and earlier in the video. So that was the draw on liquidity. And then I actually did end up moving my stop to break even today. I moved it to break even after we started trading above this swing high in here at 786. So I'll mark that out for you guys. After we swept that high, I don't have the thing on this one. But after we traded above that high, I ended up moving my stop to break even. And then we ended up getting close to TP, so I ended up just trailing my stop. I can't trail my stop on here, but I started trailing it. I trailed it to about right here, basically where my TP was. And then I ended up hitting full TP before, and my TP was just a little bit lower than the 4-hour gap. But we did end up hitting full TP there. And not hitting that trailed stop. So again, this is the original entry we had in here. Why did I enter here? We had clear draw on liquidity, which was the 4-hour gap, and then you guys can also say this high in here. And then I had entered because we had swept sell side liquidity, this minor sell side here, these two relative equal lows, tap into this 1-minute gap, tap into the hourly gap, hourly order block, and then respecting of this discount week in here. So that was the trade of the day. You guys could have taken it to the 50% level of this. I'll do black. 50% level of this fair value gap if you guys wanted to. Right, so you could have put it at 50% level, stop to break even after trading above that high. You guys would have hit TP. You could have hit the full fill of the 4-hour gap. You still would have hit full TP. Right, but I opted to trade to here. If you guys wanted to trade the 50% level, right, you could have graded out. Let me put the stop back lower to where it belongs. My entry where I had entered. Right, so you could have graded out this high here, and you could have graded out this 50% level and marked out where that 50% level would have been, and it would have been just the beginning of the 4-hour gap. So that's what we call event horizon. So it's basically the 50% level between where your higher draw on liquidity is and then where you have that lower draw on liquidity, right? So you could have taken partials here, you could have taken partials at the beginning of this gap, and then you could have had runners at this 50% level, or you could have left runners at this high, however you guys choose to trade. But this overall was a good trade. We caught about 730, 70-ish, a little bit more points. So overall wasn't bad. And then in the 5-minute, we did have an inversion as well, just a little thing to note in here. I don't really trade with the 5-minute, but if you guys want to, look at the 5-minute, some of you guys do that. We did have this 5-minute gap in here with this candle here, which we did end up inversing, so that could have been another confluence as well. We're going to add that volume imbalance there. So this candle did inverse. You could have entered on the inversion. Would have got a little less of would have been worse risk to reward ratio, but still would have hit full TP there, where you guys could have left runners to the high and then move stop to break even after trading above that high. So however you guys wanted to manage a trade, you could have managed it, but that's how I chose to manage it, like I noted before. But this is just a little deeper review on to today's trade. We'll zoom out just again so you guys can kind of see why we took this, or see the trade that we took. So I did post that short. the shorts on YouTube. That was just kind of a quick review. This is the more in-depth review of the trade that I took and why that I took it. But yeah, I mean, that's it for today. If you guys enjoyed, leave a like, subscribe, comment, whatever you guys want to do. But yeah, we'll see you guys hopefully tomorrow. Peace.